Abheek Barua is joining us to talk about the policy today, which will start any moment now. The governor's address. Abheek, morning. Sorry, Abheek. There's a view in the market that RBI may start by addressing the liquidity issue because that has been hurting the corporates, the bankers. Do you see the situation come that there should be some release on the liquidity front, perhaps a CRR?
Perhaps not a CRR, but a move towards better liquidity conditions in the market. They could start with longer duration triple Rs, which are double Rs. I'm sorry, which are longer repo facilities to borrow from the RBI of a longer duration that they currently have. That might help. But ultimately, I think in this policy they'll have to do a couple of things. One is, of course, address the liquidity concerns in the market, talk a little bit about when they see the appropriate time for infusing more permanent or durable liquidity is. Second, I think they will have to make space for a future rate cut. So I think what is referred to as a pivot, which, if you remember, the Fed did sometime around November. So they'll have to start sensitizing the market uh, to and prepare the market for a rate cut sometime in the future. The process has to be started early, and alongside, I think there has to be some softening of their stance. But I kind of agree with you entirely. Liquidity is a big concern in the market, but I think we might be getting a little carried away if we expect a CRR, an old fashioned CRR cut. There could be some tweaks in incremental CRR and so forth, but I suspect that they will play around with the existing tools that they have, which are the repo tools, and perhaps increase the duration so that banks can borrow from the RBI against government securities for longer durations. So these are broadly the things that I would expect in the policy. I think the communication is very critical. As I said, this is the time to pivot, although the inflation rates are higher than the target at 4%. But I think the consensus is, or the expectation is, that by mid 2024, they'll have to do a cut. You can't do it, suddenly. So you kind of have to prepare and sensitize the market for that. How it starts that process, or whether it starts the process today, is, I think, really critical.